Do you agree with Gunlock? And specifically because Gunlock said that the Fed does not raise rates. It is because the economy is weak.
Well, we're certainly at a risk of a bear market, as you talked about. The Fed, what's going to happen this week, it's more or less baked in. It depends on what the message is after the hike. And if it's a message just like it was in early 2016, we could be off to the races again and enjoy a value-led rally like we saw in 2016. If not, if they stick to their guns and they're saying that we're going to continue to raise, then there's a continued risk of more volatility.
If we do get what the markets want to see, which is a dovish hike, so to speak, is that a sell the news event?
I think you've already sold the news, right? I mean, the markets are discounting what I would say is bad news, right? Like economic slowdown in China and Europe and the United States. I think that the markets, the stock market and the bond market, are discounting slow growth in these economies coming forward. And the Fed is looking at who's in the malls and how much they're spending and saying we're going to have to raise rates because the demand for goods and services is so high.
It strikes me that everywhere you look, people have come to the conclusion that we're heading into a recession or a downturn or a market sell-off. New York Times style section, I think, over the weekend. Again, 5 things that could go horribly wrong next year.
Probably a market bottom.
That's what I'm
That's what you thought, right?
That's right. When the chatter gets really, really high. Wasn't it George Soros who said something like, the markets are always discounting bad news, and so you're discounting the inevitable. Look for the alternative. Look for what's not being priced into the markets. And it seems like the chatter, everything on the news today, including your shows, are about the volatility of the market, and the markets are hitting new lows. And it seems like it's a crescendo pace. Sounds like a bell is ringing now, just like a bell was ringing when there was fear of missing out for Bitcoin at 20,000 a year ago.
You wouldn't have been jumping in at that point. I mean, so if we look even at the numbers this morning, the Empire Manufacturing Index, Regional Manufacturing Index, the reading, Wasif, was very bad, but at the same time, the employment gauge was way up. So again, are people sort of talking themselves into a downturn, even while there are signs that the economy is quite strong?
Well, on the consumer side and the employment side is still very strong. I think the corporate side, they are taking a cautionary approach, which is where you're seeing the manufacturing numbers soften a little bit. And I think that's because corporations are seeing what's happening globally. Globally, the world is slowing down. We just haven't slowed down as much. So there's a risk that we slow down as well. So if the Fed pauses, we may get a temporary reprieve, but we still have to be mindful of what's going on a global basis because, to quote John Donne, the famous metaphysical poet, no man is an island unto itself, so no country is an island unto itself because we're still interconnected with all the financial connectivity, everything that's there. There's a lot of connectivity in the world, and because of that, we can't avoid a slowdown if the rest of the world is continuing to slow down. So central bank tightening does become really important, so we need that outlet.